Despite those rising commodity prices and the CPI showing over 5% inflation over the past year, Treasury yields still are not rising. The 10-year still returns less than 1.3%, so as at current levels of inflation, your real return could be negative 3.5. Why would any investor do that? Actually, the chief economist at the Tressis Hedge Fund says it's not really investors doing it, but the Federal Reserve. It's buying the bonds to keep the yield artificially low, but it has to do quantitative easing, QE, aka print money, to do that. That is inflationary. Ask Lacalle, how much is that driving up prices this year?
Yeah, more money created that is going to assets that are scarce, be it equities in which the companies are buying back stocks. That is a direct consequence. The massive buyback of stocks is a direct consequence of quantitative easing as well, of cheap money. Be it commodities, be it houses, be it scarce assets. It's basically more units of money chasing scarce assets, and that generates inflation. There is suddenly an abrupt correction, as we are seeing right now in commodities and in markets. But if we look at the overall asset price inflation that we have seen, not just in 2021, but 2020 and prior to that, obviously that is what's happening, no?
So is this what the QE hangover is going to look like? It's just going to be a collapse in these asset prices, or is there other harmful effects this QE we're going to have to deal with in the next number of years as well?
Well, the biggest risk of QE is that by having it prolonged year after year in periods of crisis and in periods of growth, is that the risk of a financial crisis is higher, and that the importance of that financial crisis is also very relevant, is much larger than expected. So, risk builds slowly. And right now, everybody, because we see markets going up, because we see the economy artificially sedated via debt and monetary policy, we think that nothing is happening. So risk continues to build. And we don't know exactly, because if not, we would be geniuses, but we don't know exactly where and how it's going to end. No, well, the same as what happened with the subprime crisis. No, everybody understood that prices of houses were going up too fast and too much, but very few thought when and how that would end. No, and when it ended, a lot of people thought, well, it's contained because it's only a certain percentage of the economy and the rest is fine, but it creates ripple effects. So the problem of quantitative easing is disguising risk and giving the idea to investors and to citizens that there's absolutely no problem in governments entering into monster deficits that will lead the economy to run 100, 120, 200% of GDP debt, and things like that. So it's giving the idea that nothing bad.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.